Welcome back to the channel, everyone. Today I'm going to be telling you about possibly the best penny stock to buy right now. SENS or Senseonics Holdings is a continuous glucose management company that I think has the potential to increase by about 28 times its current value. I think that SENS currently have a lot of potential, and they've just made a large share issue to bring in a whole load of cash that will likely be used for research and development. SENS currently sell a CGM, which is a continuous glucose management system. This gathers data about the glucose levels in your blood and feeds it back to your phone in real time, so you can get updates every 5 minutes instead of having to do a finger prick test or scan yourself every few hours when you want to figure out your glucose levels. But I think that SENS need to release an integrated pump and CGM system, because at the moment their current product doesn't do anything to fix it if your body has high or low blood glucose levels. It just vibrates, and therefore I think that it would be better if their product could release additional insulin when your body needed it, and at a steady stream, because that would be much better for people with diabetes. If they can do that, I think that they could be valued similarly to or more than Omnipod. Omnipod provide that combined pump product with a small amount of analytics, and their company currently has a market cap of around $19 billion, whereas SENS currently only has a market cap of $700 million. SENS' biggest competitor is DexCom. Now, DexCom also manufacture a CGM system similar to SENS, but theirs is self-applicated, so you can put it on yourself instead of having to go to hospital. However, the DexCom system only lasts 30 days, so you have to swap it out every month, whereas the SENS product lasts for 90 days. So maybe SENS could go down the route of self-application and follow DexCom to a valuation of around $35 billion. If you're enjoying the video so far, then be sure to subscribe to the channel by clicking that red button down below to benefit from in-depth analysis on new, up-and-coming stocks, regular news updates on fast-moving stocks, and expose-style videos to help save you time and grow your stock portfolio. Also, be sure to check out my Patreon link down below and become part of the team to discuss stocks before they start blowing up, like BNGO and CCIV. You also get access to my stock portfolio, which is updated daily, weekly live streams, and one-to-one contact. But for now, let's get back to the video. Firstly, let me tell you a bit more about who SENS or Senseonics Holdings actually are. They're a medical technology company that specialise in the design and sale of continuous glucose management systems, typically to people with diabetes. Now, diabetes is obviously a disease that affects the way that your body converts food down into sugar and then into energy. When your blood sugar levels go up, your body typically makes something called insulin, which brings those levels back down. However, people with diabetes don't make insulin or don't make insulin very well, and therefore their levels can go up too high. And therefore people with diabetes tend to avoid sugar in its entirety because high blood sugar levels are bad for you. Although the problem being is that these people can then sometimes have a hypoglycemic attack. Therefore, people with diabetes can sometimes struggle to get their blood sugar levels spot on. The old way to test these levels was to pinprick yourself or scan yourself at somewhat regular intervals to figure out your current blood sugar level, which is obviously quite a faff and could be quite painful. Devices were then built that could sit under the skin instead of having to pinprick yourself, but again you still had to scan that device every few hours to figure out your levels rather than having a continuous update on your levels. Senseonics have not only developed a continuous management system that sits under your skin and gives you real-time updates every 5 minutes direct to your mobile phone, but also analyses that data in line with your meal timings and the amount of exercise that you do, and recommends the best time for you to top up your insulin or sugar levels. Their current system has received FDA approval and EU CE approval to sit under the skin for 90 days. They've just requested FDA approval for a new system that sits under the skin for 180 days. However, the FDA have communicated that because of the current pandemic, their approvals are a bit backlogged and they're likely to receive approval in Q2 of 2021. SENS plan to release the 180-day system in the first half of 2021 and are currently working on a 365-day system, meaning that the sensor would only need to be replaced once a year. Remember that DexCom's product has to be replaced every 30 days. In terms of their financials, SENS currently have a lot of cash sat at their bank. around $26 million as of Q3 2020, although this has reduced significantly from the 31st of December 2019 due to loan repayments and a loss from operations. Having a lot of cash is obviously very crucial for R&D. They also have a good amount of inventory, around $4 million, but again this is down significantly from last year, due to a write-off of around $15 million of obsolete inventory. Now this happened just after Q1 of 2020 as a result of the pandemic, so it might be that this equipment expired and couldn't be used. We can see that SENS paid off their old loans that were falling due of around $100 million, with new loans of around $75 million and the rest in cash. Overall, SENS are currently in a net liabilities position, which is fairly typical for a medical technology company. Obviously, they do have a large accumulated deficit of nearly $500 million, but again, it's fairly typical for a tech company, and these can lose often billions of dollars before becoming profitable. Moving over to the P&L, we can pretty much see a decimation in revenue. Their revenue for the first 3 quarters of 2020 is around $750,000, which compared to the year before was around $3.7 million. Now, they actually stopped operations to new customers as a result of the pandemic, and they were only changing existing chips on a few current customers, and therefore that's why revenue is down so much. However, they did restart production and operations in Q4. Costs are high this year due to that $15 million inventory write-off, but we can see that even historically they don't generate a gross profit, which means that they're paying more for the products than they're actually selling them for. But in the future, I would expect SENS to become profitable as they benefit from EOS or economies of scale. Sales and marketing expenses also took a huge hit as they let go of around 60% of their sales staff, and I imagine the similar is true for R&D. Overall, the company is loss-making and they generate a net loss, but again, I don't think that's significantly surprising for a new medical tech company. But now on to some good news. Senseonics recently issued around $50 million worth of new shares, but just had to increase that to $100 million due to massive demand. Obviously, a lot of corporations and other people all see a very good future for SENS. It's also really impressive that SENS are issuing these shares for around $1.92 per share, as their share price has only recently increased from around $1.60 to $2.30. They're not significantly underpricing their share issue like BNGO, who are selling their shares for around $3 when their share price is actually in the $9 to $10 region. Speaking of which, BNGO hit $9.80 on Friday and in after hours trading broke through that $10 mark. You'll know that I called BNGO back when it was in the $4 to $5 region, and also CCIV is up 25% on Friday as well. And if that's not a reason to join the Patreon where you can find out about stocks before they blow up, then I don't know what is. In terms of valuation, on a comparative basis, DexCom currently have a market cap of around $35 billion. And therefore, if SENS continue on their current path of CGM, alter their product a little bit more so that it can be self-applicated, and also grow their production and become profitable, I think that they could become a very good competitor of DexCom. This means that the SENS stock could 52x from its current position. If they go down the route of an integrated CGM and pump, then I think that really the sky is the limit. There's very few companies that have integrated the CGM and the pump, and therefore if they can break into that market and dominate it, then I see almost unlimited potential for them. The SENS stock recently surged after announcing a deal with Emblem Health, one of the largest non-profit health plans in the US. I think that if SENS can use their cash that they raised from the share issue well in terms of R&D and increasing their production, and also receive the FDA approval in Q2, then I think that their stock could rise back to the $5 to $10 region in the next 6 to 12 months. Be sure to also check out my link down below to free trade, where you can get a free share worth up to £200 when you invest a minimum of £1. Yep, that's right, you only have to invest £1 and you will get a free share worth up to £200. As always guys, if you enjoyed this video, then be sure to check out some of my others. Alternatively, subscribe to the channel and ding the notification bell, because that way you'll be alerted when I upload a new video. Cheers!